Welcome back from tea break, ladies and gentlemen. I'll give about 30 seconds for us to settle in so we can constitute the panel and they can get started with the conversation. Thank you so much for returning early. We are ready and set for the panel conversation. Like I did mention earlier, this panel conversation will focus on powering the digital economy, infrastructure, finance, and skill. Thank you. Now that we're all settled, I'll introduce our moderator who will come up stage to receive the other members of the conversation. It is my honor to invite on stage a senior associate at our host firm. Please let's make welcome Ms. Fatima Muhammad. A round of applause for her as she comes up stage. She will be moderating the conversation on powering the digital economy, infrastructure, finance, and skill. Thank you so much. Now we have 5 voices who will be joining her. These are individuals who understand the weight of the conversation. I'd like to invite on stage the Chief Executive Officer of Nigerian Exchange Limited, a wholly owned subsidiary of Nigerian Exchange Group. He's also the chairman of the West African Capital Markets Integration Council, WACMIC, further reinforcing his leadership role in advancing capital market integration and development across West Africa. He also serves as a second vice president at the Chartered Institute of Brokers, CIS. He has over 30 years of professional experience spanning securities trading, asset management, and investment banking across African markets. He joined the Nigerian Stock Exchange as a divisional head of trading business in February 2019, and in 2021 became the divisional head capital markets, and now serves as a CEO Nigeria Exchange Group. Please make welcome Mr. Jude Chemeka. A round of applause for him. Thank you very much. That applause is not befitting for our panelists, so please make it louder and celebrate Mr. Jude Chemeka. Thank you very much. Coming up to join them on stage, I have the honor of inviting the Senior Vice President and Chief Corporate Services Officer at CCSO. Beg your pardon, at IHS. I have the honor of inviting the Senior Vice President and Chief Corporate Services Officer at IHS Nigeria Limited, who oversees several key functions, including sustainability and corporate communications, government relations and regulatory affairs, data governance and compliance at the legal department. He holds a BSc honors in political science from the University of Ibadan and an LLB from Foray Bay College, University of Sierra Leone. He also completed a joint law and management program at Northwestern University in USA, earning an LLM with honors Dean's List from Northwestern School of Law and a certificate in management from the Kellogg Graduate School of Management. Additionally, he holds a certification in strategy from Harvard Business School. He is admitted to practice law in Nigeria and the United States at the bars of the New York, Massachusetts, the District of Columbia, and Illinois. Please make welcome Dapo Otola. A round of applause for him, please. Thank you. Joining them on stage is the co-founder and executive director of Nalt Finance, a visionary business leader whose expertise and strategic foresight are helping to shape the future of financial services in Nigeria. With more than 14 years of experience in private equity and investment management, he brings a rare blend of entrepreneurial drive, global perspective, and proven leadership that continues to position Nalt as an innovative force in redefining access to finance. He's on stage, but please make him welcome Mr. Robert Ijewere. A round of applause for him. Thank you. Also joining them for this conversation is the Chief Technology Architect at IPNX Nigeria Limited, where he provides strategic leadership in technology innovation, infrastructure design, and enterprise architecture. In this role, he's responsible for the end-to-end architecture of IPNX cloud computing infrastructure, the management of core data center operations, and the continuous advancement of IT research and development initiatives. With over 20 years of experience in the ICT sector, he has played a defining role in shaping IPNX technology vision and capabilities. Please celebrate Oluwaseun Oluboyo. A round of applause for him. Thank you very much. There's a last sit. We are supposed to have Mr. Obichukwu Ugodre, who is the CEO of Nairametrics, but he will join them. Oh, I'm sorry. I apologize for that. Thank you so much. This is founder and CEO of Nairametrics. Needs no further introduction. We know him. It's an honor to have you here, a chartered accountant with extensive experience. He has spearheaded significant business transformations and strategic reorganizations, enhancing operational efficiency and profitability. Please celebrate Mr. Obichukwu Ugodre as I now hand over to our able moderator to steer the conversation from here. Thank you.
Very much. Good morning, distinguished guests, colleagues, industry leaders, and members of the audience. It's my pleasure to welcome you to this panel on powering the digital economy, infrastructure, finance, and scale. Today, our panel brings together an exceptional mix of leaders shaping conversations from different vantage points: telecommunications infrastructure, capital markets, finance, broadband architecture, and digital economy. Our goal this morning is not only to discuss the future of Nigeria's digital economy, but basically to interrogate what it will realistically take to build it at scale. And to start this panel, I would also like to welcome the panelists. To start this panel, I would like to just perhaps set the tone of this discussion by throwing a general question to the panel. Basically stating Nigeria's digital economy continues to grow rapidly, but growth alone does not always translate into sustainable scale. In your own different views, what is currently the single biggest constraint to building a truly scalable digital economy in Nigeria today? And I'll start with Mr. Chiemeka.
Right. Good morning, distinguished ladies and gentlemen. Just allow me to rely on already established protocol. I'd like to thank DOA for inviting the exchange to be part of this conversation. Because it's really, technology is at the heart of our strategy at exchange. And to your question, I think it's really around the challenges that we see, which is typically power. I mean, to build the data centers that will power the digital economy require a lot of capital to be able to do that. And if you look at the Nigerian perspective as well, most of the instruments will be imported. And so there's also the FX issue, which is not a Nigerian problem. It's more or less frontier emerging markets challenge around the dollar. That continues to pose a problem. Obviously, talent is another major constraint, but I feel that is the infrastructural backbone required to drive it that is really the major challenge. Someone did say that why governments in Africa are focusing on building infrastructure, roads, ports, there should be a deliberate attempt to also build infrastructural backbone that will support the digital economy because of the job opportunities it will create for the young population of Nigerians as well as Africans in general. So I think that's the way I'll look at it. Thank you.
Thank you. Good morning, everyone. I would just rest on existing protocols established by the chairman also. You said singular, but if you permit me, I will also, because the problems are many, and they're all quite significant. I'd also align in terms of power. One of the things that digitizing the economy enables us to do is to leapfrog over a lot of developmental challenges. And without power, there's no conversation. We work in the telecommunications infrastructure space. We have at IHS over 16,000 towers in Nigeria. If you look at India, that has reliable grid power. If you say you want to put up a tower, it's like you put up your tower and you connect it to the grid. You're done. You're moving to the next tower. Over here, you put your tower up, then you need to get the generator there, then you need to figure out how you're going to get diesel there. And then along the way, your diesel is getting stolen and all. You need to start looking at alternative sources of energy. You put in batteries, you put in solar panels. Those two start getting stolen. And then you're looking at what next. So from the power dynamic alone, the number of issues that emanate, from that front. You're talking, one, availability, two, the cost of substituting what the government should be providing for you, or even private sector as it is now, should be providing, but then the backbone of even that is not in place, effectively. So availability, cost, and then reliability. So over time, we started moving towards connecting to the grid where the grid is available. You now start dealing with a regime that starts talking about band A, band B. Then is the power even there? So what in India, a generator is supposed to be an alternative if the main grid fails. If it fails, and that if the probability is low. Over here, it's the flip of that. You're relying on what you are providing. So the infrastructure companies are providing and taking the place of what either the government or private sector enabled government infrastructure should be putting in place. Then you talk about multiple taxation, which I said we have a myriad of problems. Every last tier of government is trying to take a piece out of you. We wake up sometimes to new levies that have been created overnight, taxes, and just a myriad of hurdles that you need to even cross. The regulatory landscape too is, somewhat fuzzy in some areas. So you have incentives that are supposed to help. This is the sector that's supposed to drive the economy, propel it into the future, or into what should be the future today. But yet, every step of the way, hurdles are being placed in front of you. I think last week it was that, you're trying to encourage investors to come into a sector, but then you've placed knowing fully well that almost every component in terms of the infrastructure space depends on imported products. We now have a new regime of customs tariffs to deal with. Yet, it's an interesting and dynamic place to be, but challenges along the way.
Thank you very much. Mr. Robert?
Thank you. Permit me to stand on already existing protocol. You asked a question that I view as quite unfair because it is not even close. And I'm going to sound like a broken record when I say infrastructure. I'm choosing a different word from power. Let's just call it infrastructure, but we know what we're talking about. In the last 60 days to 90 days, diesel costs alone drive home what the challenges are from an infrastructure perspective. What that then means to those who are looking to start up, and that's the power really behind the digital economy. A lot of them are startups, a lot of them are new to the space, a lot of them are looking for capital. By the time you now look at the standard challenges you have in setting up in a country such as Nigeria, and then you add to that the singular cost of powering these systems, it's right there, puts you at a severe disadvantage. So I would, without prejudice to the rest of the panel, apologies, but yes, power, that's the big issue.
Thank you very much. Mr. Oluboye?
Good morning, everyone. Thank you for having me. Permit me to stand on the existing protocol. And permit me to join everybody else in saying power, infrastructure. But beyond that, we also look at reliability, because the digital economy, the services, the products are of the kind that I would say are kind of addictive, right? And I put it this way, you get used to using certain services, you can't live without them. And then some afternoon with no warning of any kind, it gets taken away from you and you're scrambling. What do I do? Right? Okay, so maybe it's not just social media. Maybe it's working from home. Maybe it's online schooling, any of those things. And if fiber cut happens somewhere, a base station outage happens somewhere else, and all of a sudden you're stranded and you're wondering, where do I go from here? What do I do? What's my backup plan? Is it going to work? So I think reliability, which is linked to the infrastructure, is a major hurdle. In addition to that, I think we should also consider the gap, the digital gap really, in the haves and have-nots from a digital point of view. Do we all have access? Do we all have the same opportunities? I think those would be some of the major components that we need to tackle. Thank you.
Can you hear me? All right. Good morning, everyone, and thanks for having me here. We've all spoken to the challenges. I don't know why you wanted us to start with challenges, because there are plenty. If we start now, we'll not finish today. But I think everybody has essentially spoken to the core issues: power, capital, access to capital as well. But I think there's also right of way. I think for most telcos, from some of the things that we do also cover, a lot of them complain about right of way issues, which is also affecting broadband penetration across the country. And so that is why a lot of people tend to rely a lot on mobile data, whereas we all know broadband data, like the likes of which IPNX does, is probably more even reliable and cheaper. But right of way is a challenge across the country. You have states with their own policies, with their own regulations, government with their own regulations, policies, and all these things add to cost of doing business. So even when they are able to provide their own independent power, they still have policy challenges as well. So there are a lot of them, but I think the panel has essentially captured most of it. I just wanted to add right of way as one of those major challenges that they face.
Thank you very much. So what I tried to do was just, so that we can just delve into the issues. So we know what the issues are, and then we can now start proposing the solutions. So with that, I would like to start with Mr. Chiemeka. In the last few weeks, we've actually seen a remarkable momentum in the Nigerian capital market. From the perspective of the Nigerian capital market, do you believe our markets are presently structured to adequately support long-term digital infrastructure?
All right. Straightforward answer would be to say yes. Bearing in mind that you have to look at it in totality. So where are we as a country? We're classified under frontier markets. So currently we're doing close to $30 million a day on the equities market side. Our total market cap combined will be around 155 billion US dollars. So that's like second in the continent, close to, next to South Africa. South Africa has a market cap of over 1.4 trillion US dollars. So you can see the gap, which is also a reflection of where we are as a country in terms of the other elements. The market is growing at an alarming rate, and we're particularly happy, especially with the current administration in terms of the policies driving this growth that we're seeing, which is really pegged on the harmonization of the exchange rate. So there's now commonality. FX, which used to be a problem for investors, international investors in particular, has now been addressed. So we also have the issue of just trying to build infrastructure. And so the removal of oil subsidy leaves governments supposedly with sufficient funds to address the infrastructural gaps that we find in the local economy. So that's really what is driving the growth as companies are now beginning to gather momentum. Let's leave the Trump and Iran effect. We're beginning to see interest rates moderate. Inflation was coming down, and that is really a sign of recovery. So the profits that companies are posting now is really a reflection of a better macro, and that is what is also driving institutional as well as domestic play. But it's interesting to point out that the growth of the market in the last couple of years has been largely driven by domestic inflow or domestic participation. International participation, which used to be 50% of our overall participation, has now moderated to 13%. Last year was at 22, and now it's come down to 13%. So we have now a more robust capital market, and the funding that corporates require is coming from this market. And so I do hear people say, is the market deep enough? But from the same markets, we're able to raise over 4.7 trillion for the banks during the recapitalization. And we know about the impending offer that is everywhere, the size of the offer. So the market is deep and is able to accommodate just based on the growth trajectory that we see. And it's important to also clarify that the exchange is not just an equities-based exchange. We are indeed a truly multi-asset exchange, because we do have other products that will allow corporates to raise the required capital that they need across different asset classes. We have 146 listed companies. We do have a combine of 322 listed securities, from FGM bonds to corporate bonds. And yes, we do have corporate bonds listed on our exchange, 40 to be precise. And we have state bonds that are also listed, 9 of that. And more recently, we're now listing commercial papers. We have 7 of that. So this provides an opportunity for corporates to be able to raise capital across different asset classes, and at the same time provide opportunity for investors to just diversify their portfolios and not be slaughtered by what happened during the financial crisis, where everybody was just neck deep in equities. But that said, I think what is really important is the integration of the exchange across West Africa, across Africa. And so that provides even a much larger platform. And obviously, you may have heard about the pending offer talking about distribution across Africa. So that is really the philosophy of our market, that it's not just a singular country market, but it's now integrated across the West Africa region. You have PROVM, you have Ghana, you have Cape Verde and Nigeria. And across Africa, you have over 25 other exchanges. We do have what we call the African Exchange Linkage Project, which is joining markets across Africa so that corporates can raise capital across different countries in Africa, not just their local economy. So that gives it a lot more robustness in terms of the depth of the market and ability for corporates to be able to raise capital. I can go on and on about what the market is doing, but I'll just touch on 2 main themes that I think corporates need to be mindful of: the non-interest finance as well as the sustainability finance, and especially for the talk around technology and how it can be funded. These are areas that can be utilized to fund adequately some of the heavy projects that will form the backbone to drive the digital economy. So the federal government is utilizing the Sukuk efficiently in raising capital. Over 1 trillion naira has been raised around refurbishment of roads. And we can see the impact and how that has even helped to open up access in the overall economy. And I think that non-interest finance is another space. The domestic pension fund that I mentioned earlier, that is really driving our capital market, is growing and is driven largely by the young population. We have over 30 trillion of assets under management, and less than 15% of that is in the equity space, but the bulk of them are in the fixed income space, and they will continue to be the key drivers. So I mentioned these 2 themes because that's really where there's a supply gap, and corporates need to start thinking about issuing, because the investing capital are just there dormant. They can't be put elsewhere. They have to be utilized to finance sustainability as well as non-interest finance, or about 5% of the total AUM. So that is the area that I feel that corporates are missing it. And working with IFC and Islamic Development Bank, we've been trying to create a lot of capacity building for corporates to understand that. I'm happy that some states are beginning to also utilize that approach, Lagos State in particular. And I believe that some other corporates are beginning to really consider how they can raise capital to fund their expansion, utilizing these two asset classes that are not common, but do have a lot of investable funds behind them. Thank you.
Thank you very much, sir. Building upon that, and I think we started speaking about acceleration in capital flows into Nigeria's digital economy. What would you say if there was one structural change? What would it be, either in regulation, product design, or market infrastructure? What do you think would accelerate capital inflow into Nigeria currently?
I mean, it's a combination of things, to be honest, because of the low base of where we are. So we have to do a couple of things together to accelerate it. But if we really want to focus on one, I think it's really more around trying to create the enabling environment for which will really be around the regulatory framework based on what it's being adopted, so that companies can effectively maximize their ability to attract international as well as domestic flows for the projects they are looking to do. And it's becoming more like a main theme now, because when we talk about asset classes, we're always thinking around equities, bonds, commercial paper, but we're not really, and then we think about infrastructure, but we're not really segregating digital infrastructural backbone as an asset class that should be invested in. And it is very critical to frame it out so that institutional investors can actually identify it and see how the investments that are making can translate into meeting the investment objectives. Because if you think about MTN and Airtel, those are entities that are listed and they're also part of the core driving this digital drive. But there are so many of them that are not listed and perhaps just looking for funding away from the market, more or less utilizing private equity. And that in itself has its inhibition in terms of being able to have a sustainable pipeline. I think that can always be achieved through the capital market. Let me just conclude by saying that if you look at the overall economy and the aspiration of the federal government of having a $1 trillion economy, the capital market remains the easiest route to market to actualizing that. And the digital economy has a huge role to play because of the capacity that, if you think about the growth of the telecom space in terms of contribution to GDP, it's very important for the commitment to come from that high level. And I think that is really what will cement the backbone required to drive it. I'm so excited that the NGX will work tirelessly to create the legal framework for companies to be able to access capital. So we have the technology board, and that allows fintechs as well as big tech companies to be able to raise capital from the exchange in a seamless manner. We do realize, because of the infrastructure that they need, some of these things are dollarized, so a lot of them are looking to raise dollars. But we also have a product we call the Nigerian Depository Receipts, which can actually be sponsored or non-sponsored, that will allow some of these companies to raise capital abroad and at the same time receipt their shares, so it can be receipted in Naira, so that the underlying assets is in dollars. That way it will be helping Nigerian investors to participate in the offers that they can participate abroad, and at the same time help to domesticate wealth that is accruing from the participation or utilization of these platforms in the local environment. I'll stop here for now. Thank you.
Thank you very much, sir. I'll quickly move on to Mr. Otuna. And infrastructure remains the backbone of every digital economy conversation. Yet we have highlighted all of the challenges,
Some of them.
Almost all of them, right? In your opinion, what do you think the meaningful collaboration between government and private sector in slowing down or in improving these bottlenecks would be? What do you think a consolidated effort, both with the government and private sector, would yield in terms of removing some of these highlighted or listed bottlenecks that we have seen affecting infrastructure?
Right. Thank you very much. I think one of the things I tend to talk about often is, when you say collaboration, people can come together, sit in a room, have conversations, and nothing comes out of it. To have effective collaboration, you have to see yourselves as true partners with a goal in sight. So if we're talking about developing the digital landscape in Nigeria, we've had plans in the past, we have plans today, but in terms of the trajectory of progress, how far have we truly gone along the way? So when we say a partnership, the two sides, both the public and the private sector, must sit down together, and actually be committed, to making to achieving the goal that's set. One of the things, and I must commend the Honorable Minister for Communications, Innovation, and Digital Economy on the project Bridge, which seeks to lay out 90,000 kilometers of fiber within the country, right? Today, if we're talking about infrastructure development or growth, we have probably about 30, 35, 40,000 since the inception of telecommunications, kilometers. Okay? You look at it, about that 30, 40,000, GICL alone, one of the IHS subsidiaries, has done 16,000 kilometers in about 4.5 years. So if altogether we have 40, and somebody is coming down to say, look, he wants to do 90,000 kilometers, I think it's very commendable. But in that room, the conversations are also being quite candid in terms of how do we address the challenges that will come up along the way. Because if you're not having candid conversations, again, you'll meet roadblocks. Because the Honorable Minister and his team will sit down there. You spoke about the framework being put in place, the enabling environment. It's a term I particularly like in Nigeria, because that enabling environment is typically fraught with issues. But I'm going to take a leaf from the state of California. It's the 4th largest economy in the world. The largest source of revenue for that state is personal income tax. But how do you get to personal income tax? You have elevated and created opportunities for people to actually generate revenue. So the focus is on people generating revenue, not the government generating revenue. Okay, so once you start talking about that, you start talking about the small scale businesses and all, the mid-sized companies. If you focus on how do I enable these guys grow so the people that work within them can take more home, the various sectors of government will make more ultimately, as opposed to just focusing on revenue drive from established organizations, right? We have, and I was talking earlier today about one of the state governments, which will not be named, but they've taken a rather unique approach in coming after us. Rather than focusing on the company as a target, and this is a state that is looking for socioeconomic growth within that state and for its citizens, right? You've taken individual towers and instituted lawsuits against the towers. So in one fell swoop, we are dealing with 100 and something cases instead of one case. They go in there, you're supposed to be having meaningful conversations, they shut down your sites. Now, when diesel runs out on that site, the network goes down. If it's a hub site, it can take down maybe another 100, 200 sites along with it. So you have issues crisscrossing several states, right? But all these from conversations that should be meaningful, but are not happening. One can go on because of the myriad of issues that we encounter daily from conversations that should be happening. I was saying again this morning, I'm waiting for the first state to come up and invite probably the CEO of MTN, the CEO of Airtel, CEO of IHS, ATC, and sit down, come and spend the day with us. How do we make our state a forefront state for telecommunications in Nigeria? How do we get our youth involved in the telecoms sector? How do we position them so that they can become leaders in this industry? It's not happening. It's unlikely to happen because everybody is focused on how do I generate revenue today instead of how do I grow the pie. We're very proud of our partnership with the Kwara State government, okay, which we went there to lay fiber. Again, the federal government has said right away 145 naira per linear kilometer. Some states have said, forget that, we're not doing it. Some states have adopted it. Some other states have said, okay, we'll adopt it, but we put the money somewhere else waiting for them down the road. But again, it all goes back, do you intend meaningful development and growth for your state in terms of these collaborations that are supposed to be helpful and fruitful to developing these nations? We went into Kwara State, they said it's zero. Well, like, what do you mean it's zero? It is zero. Well, we can't just come in and run our fiber through the state. What emanated from that conversation is the Ilorin Innovation Hub, the largest innovation hub in West Africa today. So who's benefiting from it? The indigents of Kwara State and the neighboring states. Okay, a young gentleman came up today. He said he wanted to pitch an idea. I'd love to talk to you after this. I will refer you to the Innovation Hub. Come pitch your idea. Right? The young kids with really bright ideas across this country, but which partnerships that should be occurring are not helping. There was a hub in Alimosho. The kids there will take their ideas to a certain point, then they have to take it to Oshobo because the equipment that then needed to take it to the next testing phase is in Oshobo. You then come back and plug it in, and if it's not working, you're going back to Oshobo. What we did from a sustainability perspective, retrofitted their hub for them, put the equipment in there for them, put 3D printers in there for them, and they're running. So when you talk about collaborations and what partnerships you'll be doing, CNII is another example. Telecommunications infrastructure has been designated as critical national information infrastructure, right? But the enforcement side of it, how do you propel that forward? Because the amount of fiber cuts experienced every day, and we're not saying just that they're cutting the fiber and going away. Those ones happen when maybe there's road construction going on, it's accidental. These are guys actually stealing the fiber, extracting the copper from it and going to resell it. It's a business. But what you're then doing is, one, you're depriving digital infrastructure development, right? You're depriving states and individual citizens of those states from growth. So again, the public sector, the enforcement agency, there's a CNII team within the Office of the National Security Advisor, and they're doing a lot of work. But the challenges are extraordinarily large. Okay, we engage that team quite frequently. The amount of thefts we experience on our sites. At some point, we started putting on, and the guys doing this work too are not sleeping. The guys doing the stealing and all. So at one point, you started putting trackers in batteries. Now, if you have 16,000 plus sites, you're not putting, all the batteries or converting all the batteries into tracker. You put random ones. But you get there, they will have stolen all the non-tracker batteries, and they'll leave the trackered one for you. Meaning they have the tool to detect which one has the trackers, right? Some of the conversations I've had with the team, I honestly can't discuss in the open, but they're doing a lot of work, but there needs to be more work done on the enforcement side. If we have 16,000 and others have, thousands of sites also, 10,000, 11,000, etc. There are about 40,000 towers across the country, and we're saying we need more. If you're not effectively policing the activities going on the 40,000 you have, expand and protect those ones. It's going to be a challenge, right? Spoke earlier on about multiple taxation. Everybody knows, at least every first-year lawyer, one of the first things you learn about is what's on the exclusive list of the Constitution, the matters that are left for the federal government to legislate upon. Environment is one of them. We wake up every other day, there's a new state that has sued us because we sue. because they're trying to collect money for environmental issues, right? It is clear it's for the federal government, so state after state, we're going to engage lawyers, time, effort, money to fight the case. The case goes on for years. We win eventually because it is crystal clear. And you're wondering, this is a state that has a Ministry of Justice that should have advised it in the first place. It's those kind of conversations. We had an issue in one state, they claimed that we owed them 9 billion naira. We went for the first meeting, the amount became 19 billion naira. Then their consultant came and said, no, it's actually 3 billion. I'm like, whether it's 9, 19, or 3, we don't owe you money, okay? Our parent company is listed on the New York Stock Exchange. We don't play games with regulatory issues. They sent a letter the following year. It had gone up by another 600 and something million. The year after that, it went down to up another 700 plus million. We eventually went to the state. At the end of it, they said, oh, can you do CSR for us? Why didn't you say that from day one? So again, the conversations that should be happening, frank, honest conversations in terms of how do we develop digital infrastructure are not really happening in as many places as they should. There's a lot more that can be done. There's a lot more that should be done, but I'll rest there.
Thank you very much. Very quickly, because you actually touched a little bit on broadband penetration, especially speaking to the Project Bridge initiative, what would you say the sequencing of infrastructure investment should be in order so that we do not increase the rural to urban divide?
Thank you. When you talk about the backbone, of infrastructure, where I would start off, because if you go into the urban areas, you see towers all over the place. In fact, I always find it interesting. People who say they don't know IHS, when I say, oh, those towers that you see, and they finally realize that, okay, yes, this is a tower here. You can't stop seeing towers. It's just the way it is. Once you see one tower, you just can't. You start seeing them in the urban areas. Everywhere you go, there's a tower. When you go to the rural areas, it's not the same. I think one of the moments that bring me probably the greatest delight for working in this space is when we actually put up a rural tower, and every now and then we record people making their first phone call. You see the pure joy on, I call it unadulterated joy, happiness on people's faces. They're talking to their relative and they're shouting on the phone because they don't know that you don't need to shout on a mobile phone, but it's happiness. So if we start with that, Project Breathe expansion, the 90,000 kilometers, focus on the last mile, getting it into the rural areas, okay? It would be a fantastic place to start the sequencing from. Then you come into the middle mile areas, not the peri-urban areas, and get it into that. And then you now start looking at, okay, everybody's talking about quality of service issues, even in the urban areas. How do we address those? But that way, you then cover the entire gamut of the nation, in probably the shortest possible time. But fiber is a fantastic place to start off with, because once you get that into areas, there's a lot that can happen. But I'll also, let me just speak in terms of the importance of moving into this digital age. Sorry, there's a fly here. I was attracted to him when he was speaking. Now it's found me. So there's obviously something. Just get ready. It's coming to you.
It's moving from one speaker to another.
I started off speaking earlier on about how it can enable us to leapfrog a lot of developmental issues. Every once in a blue moon, these opportunities arise. Okay, with every industrial age, there's and I'm glad the EBC, when he was talking, spoke about the different revolutions that have taken place across the history of time. We're right smack bang in the middle of one. If we fail to take advantage of this, we'll be again, left on the back end, and development will see us. I always find it amazing, when you read about some of the comfort zones that developing countries are putting in place for themselves using digital tools. I think it was Japan I was reading about, and dogs walking, crosswalks, for dogs, where they can sense the thing with their paws in terms of how they move. People are moving into autonomous vehicles and all. I'm scratching my head because I'm wondering where we are in that circle. There's a lot of work to be done. In this room alone, there are a lot of bright minds doing a lot of interesting things. I think government needs to figure out a way to tap into this, and work very closely with the private sector. There are a lot of bright people in this country. And indeed in government too, there are a lot of bright people. But that meeting, that honest and frank meeting needs to occur. Thank you.
Thank you very much. The fly has actually moved on to Mr. Ijewere, so I think it's time for us to move on to him. From your perspective as a financier, what are the biggest barriers preventing Nigerian digital businesses from accessing the type of capital that they need to grow sustainably?
Okay, so I have, yes, the fly is here, by the way. It seems like it's following the sound of our voices, so we're going all the way to Yogo. I have to speak with a bit of a bias towards SMEs because I believe for real impact, that is where attention should really be. And Mr. Otunla actually touched on that when he was giving the analogy of California and how they do it there. So the challenge that I see from where I sit is most of them tend to be, not all of them, but most of them tend to be asset light. Now for traditional financing, finance institutions and banks, that poses a challenge because it reduces visibility. Financial records tend to be weak as well. So if I ask for 2 years audited, which is critical for credit evaluation, what are we able to achieve? What are we able to review? Those two things are, they speak to one of the biggest drawbacks that most SMEs, most startups are going to face when they walk into a bank or a traditional. And that is something that I think really requires a cultural shift from financiers. It's because it's a shared challenge. By nature of what you are doing when you're in the digital space and you're a startup is, you have this mentality, it's a Silicon Valley mentality, move fast and break things. So you're not really thinking about your audited accounts when you're trying to innovate. And the pace at which you're trying to innovate is quite rapid. So if we're looking for how do we meet them where they are and also try to protect what we have extended, which is credit. I mean, at the end of the day, for us as financiers, most critically, our money must come back. So there's a saying that we have where we say return of capital is much more, return on principal is much more important to us than return on principal. So we are looking at it from the perspective where we do want to lend because that's why we're in business, right? But at the same time, that money must come back. Even if our interest doesn't come back, the money must come back because a lot of times it's not our own money. So we have a situation where we're looking for new ways to underwrite this credit and new ways to assess whether or not these are safe bets. And obviously, we all know about the statistic of 80% of startups tend to fail. You do not want to be stuck with one of them. So in looking at new ways and looking at new approaches to evaluating this credit, where there's the Secure Transactions and Movable Assets Act of 2017. There's also the National Collateral Register. These are things that have now introduced something that specifically caters to digital businesses, and that is intellectual property. So we need to better understand and evaluate, look, when we're talking about collateral, because these businesses are asset light, what are they able to show us in terms of how do we secure this? Now, we need a lot of people to be, a lot of different financiers to be in the game with us. We need people in the legal space to, you guys need to actually help us with this matter, because we need to develop a framework around creating objective valuations of what the people's IP assets, because that allows us to evaluate, and when you're asset light, it's not necessarily a disqualifying effect on trying to access credit. And then I'll end with I saved the best for last. The biggest challenge is cost of capital. It really is that simple. Whereas you are a viable business, when your cost of funds is 15%, that changes dramatically when it's 30%. That's the simple fact. So you look at an SME, and if your margin cannot absorb a cost of capital that we know in Nigeria is as high as 30%, MPR currently sits at 26.5%. So even us as financiers, we have collected money from our investors, banks, from depositors. We have to create a return on that money while being extremely careful with who we extend those facilities to. And in doing that, it now creates a push and pull situation where we want to give capital at a reasonable and realistic cost, but we know that our cost of funds means we are within a particular range. At the same time, the digital business, the lending, the SME that's lending from us knows that they have margins they have built in. They're already bootstrapping it. So are they really going to be able to pay the cost of funds? And it is responsible as lenders to say, we've looked at your cash flow, you cannot afford this, and then lend to them anyway. There are ethical issues around that, which we try to stay clear of. But that's how I would rate it.
Thank you very much. You spoke about getting the money back. And interestingly, it actually delves into the next question I was about to ask you in terms of currency volatility, high interest rates. What structures would you say you currently have in place to mitigate or reduce the challenges in getting back the seed capital from most investors?
So with regards to, this is part of the average financier who is in it to make a profit, has to be a responsible lender, because essentially you're going to erode your market if you aren't. So we sit with a responsible financier should sit with their client and allow them, because you're like I previously said, my assumption is most of the clients we're talking to, most of the SMEs that we're discussing with, they do not have good credit presentation. So you have to actually sit with them. You have to spend the time and go through their numbers. If they don't have their 2 years audited accounts, you sit with them and say, look, let's look at what your receivables are. Let's look at what your payables are over a trajectory of that 2-year period. Let's look at what assets you do have. Let's look at valuing at a discounted rate your IP as well. And we create a situation, or you should, as a responsible financier, create a situation where you can actually advise them, we're too expensive for you. As the financier, you cannot afford us. It might appear so on first glance, but we advise people not to take loans for us. We could give you the money, but that right there is the irresponsible part. That's the unethical part, where you're extending credit to businesses you know in reality cannot pay or will be too hamstrung to pay back that credit. So I would say one of the most critical things to keep in mind is looking at different, I would say maybe a blend is what favors most SMEs. It's a little difficult to say because it's a high barrier for entry for a lot of SMEs, right? If you're a startup, I would want to push you towards trying to get a blend of funding. That is where you approach DFIs. And if you have a good enough business case, you can approach DFIs for the initial infrastructure costs, because those are longer term facilities essentially those are at lower rates as well, because there is a focus on infrastructure being important. Infrastructure being key. I don't mean infrastructure like we talked about earlier. I'm talking about infrastructure being the digital infrastructure that you're trying to lay down. Most of these businesses have really high initial capital outlays, and the setup costs are quite high as well. So after getting the DFIs on board, then you can approach more traditional financiers who have that higher cost of capital, and then you can be thinking of things like how do we finance receivables? Because it's shorter tenured financing you would need because of what I said earlier about the cost of funding. It's shorter tenured funding that you would absolutely need from a place like Nigeria, because again, NPR has pegged the rates at a particular point. So that means that is your standard, right? What is your margin going to be after you have paid through this long period of time where there's a long gestation period before you start seeing the benefits? I think it was about 20 years or 20 years plus Amazon. They started small as well, right? But there was about 20 years before they saw their first day of profit. Now, for me, I'm not interested in hearing that it's 20 years before you turn a profit. So that's why I would say a blend would probably work for you. So having access to that more patient capital, which I believe most SMEs and startups will absolutely need. And then finally, it's just the shorter tenured products if you're talking about local Nigerian financiers.
Thank you very much. I will quickly move on to Mr. Oluboye. Mr. Oluboye, cloud adoption, AI use cases, and data-heavy services have increased and accelerated rapidly over the years. Nigeria's broadband and fiber backbone, do you think the latency, the resilience, and capacity demands, is Nigeria's infrastructure ready in terms of the next phase of digital economy? How are we able to curb all of these latency issues currently envisaged?
Short answer is no, we're not ready. The good part is there are things we can do, and that some are shorter term than others. Latency, for one, is helped by domiciling the services locally. So recently we've talked a lot about digital sovereignty, about bringing things into the continent, into the country. A lot of services today run on the cloud, and just about every cloud service we use is somewhere else, US, Europe, elsewhere. If these things can run here, you will agree with me that it will be faster to get anything from Lagos than from Portugal or from London or from New York. Moreover, it also means that we can manage the experience, because experience is really important when you're talking about digital services. I'm sure all of us know what it is like to have to refresh a page. You open a page and you wait, and then you wait, and then you be like, what? You're wasting my time. Will you complete already, right? Now, you can guarantee the responsiveness of those services when they are closer to you than when they are further away. So again, it is super important that we have those facilities here, the data centers, the hubs, the IXPs, where traffic actually stays in country. If I'm having a call with someone in Kano from Lagos, why should my traffic go all the way to San Francisco or wherever else? What's it doing outside Nigeria? How quicker can it be if it was somewhere here in Lagos or even Abuja, somewhere between both of us? So there are a number of things we can do. We have the internet exchange points. We have ISPs connected to them. We do exchange quite a bit of traffic in country, and I'll be happy to see a lot more of that happen. And then we have some of the content providers also bring their resources in country. We have the likes of Google, Netflix, that actually have cache boxes and things like that in country, that mean that when you are Netflixing and chilling, your traffic is actually coming from my data center here in Lagos, nowhere else. So it's a smoother experience for the end user. It's a better experience for the service provider, because there's so much transit traffic that you're not having to incur because the data is already here. So I'm not talking to Portugal or some other remote destination every time someone starts a movie. That movie comes down once, and then I can rebroadcast from here any number of times. In terms of our infrastructure, there's a lot more to be done. I see infrastructure not just from a fiber point of view. Earlier on, I spoke about digital access, right? In some parts of the country, especially the remote areas, non-terrestrial solutions may be the first thing they get, right? Satellite-based solutions and then microwave-based solutions before we get to fiber, and it's a progression. But ultimately, we need to get everybody on fiber as soon as possible, because that is what can really deliver the kind of sustained bandwidth that we will need. It's not we may need, we will need it for sure. Again, this is one of the reasons why we're excited about Project Bridge and the potential to actually open up the country to everybody. So imagine at the level of every local government, you have at least one place, maybe it's some sort of hub at the beginning, and then you spread out from there, where people can actually get reliable, consistent experience of the internet and of digital services. So are we ready? No, we're not ready. Can we be ready? Yes, there are a number of things we can do. One of the earlier speakers spoke about collaboration and intentional conversations. I have to be honest with you, I don't like talk shops. I think we do a lot of talk shops in Nigeria. We talk, we clap, we take pictures, and we go off and meet again next year. What has come of it? So it is important that when we have conversations like this, we actually sit down and draw up action items and hold ourselves accountable and say, you know what, when we meet this time next year, I'm going to have done this, you will do that. And if you don't do it, you have questions to answer. And we actually take ourselves seriously, because I think it is in our hands to open up Nigeria to make it the country we want it to be, digitally and otherwise. Thank you.
Thank you very much. So very quickly, I'll take Mr. Ugodere. From your vantage point, tracking markets, businesses, and investor sentiment, what does the data tell us about the real commercial strength of Nigeria's digital economy?
All right, thank you. I mean, it depends on how you're looking at the data. They will tell you that penetration in Nigeria is almost 100 million, I think 80 million or so plus. We have one of the best infrastructure when it comes to payments in Nigeria. Of course, that's also internet enabled. We have a very solid switch. We have incredible fintech companies in Nigeria as well, at the forefront of the technology in Africa. But I like to look at it from the point of view of value that the digital economy brings to Nigeria. And so you want to start first from payments. So I think we started with transfers. With a lot of those fintechs, it's easy to make transfers. Now, I was telling somebody recently that Nigeria is probably one of the few countries in the world where you can transfer 100 million naira in minutes, right? And that same day you get credit. A lot of people take this for granted. If you own an account in US and you try and transfer $10,000 twice within a day, it will flag you, right? But here, it's pretty easy. So we've seen our fintechs solve that problem. It's also solved e-commerce problem because of the growth in the digital economy. E-commerce is thriving. So anybody can essentially set up an e-commerce shop now, because you're rest assured that transfers would happen. You also rest assured that the technology is there. The internet services is also there to ensure that transfers also happen. Gone are the days where you make a transfer and then the vendor is waiting to say alert Nova come or Nova Siamo. Now it's gone. It's almost instantaneous. In fact, you go to the supermarket these days and people don't even want to pay with their debit cards anymore. They just are so confident that once they transfer, whoever is at the till will just pick up the POS machine, and then you see the alerts come in. You've also seen the digital economy also solve problems within utilities. So today you can pay any of your utility bills with from your phone. Even for those who use internet services like whether it's Elon Musk Star whatever, you basically pay from your phone. So these things have been solved. But I guess the next step for all of us now is how do we then start to create value with the digital economy? And I think you see this fly is now here. I think this thing is a setup. So anyway, how do you then create? This is a digital fly, by the way. It has to be. So essentially, credit. I think we need to start to solve credit problem. It's already happening, but we need to see that in an explosive manner, particularly consumer credit. When we get to a time where I can walk to any store and I want to buy a 65-inch flat screen TV because I just got my first paycheck or my third paycheck, so I'm trying to move out of my parents' house. I don't need to save 10 million to be able to do that. I can just, by virtue of having a job, I can just go in there and then collect my items and then pay over time. I think that's where you start to see the real value of sort of digital economy that we have today. So we need to solve that credit problem. The next one, which is also gradually being solved, is capital formation. I think Jude also alluded to that earlier, where very soon you're already seeing that people can invest in any market, whether it's stock market, bond market, from just your phone. But beyond that, you want to also be able to, subscribe. Either it's IPOs, you want primary listing markets, whatever it is, even global markets, you want to be able to facilitate these things on your phone. We hear that the Dangote IPO that is coming, it's essentially going to be democratized from what I hear. I hear you would even be able to buy it from your POS, right? So yeah, so those are the sort of things that we need to now start to see how we can use the digital economy for for capital formation. And then of course, the final leg is now P2P. So we now start to go from P2P lending to P2P borrowing, P2P investments, and then solving other critical issues nationally. So for me, we are in the right we're in the step in the right direction. I think as much as we've mentioned a lot of challenges, I think we've grown exponentially. It just shows you how resilient the digital space is. No surprises that digital economy is one of the fastest growing space sectors in the country so far. Has been growing at this speed of 10% quarterly for the last three years or so. I think the 6th or 7th largest subsector in the economy right now. So even this 3 or 4% GDP growth rate that we're seeing is because of the digital economy and telecoms in general. So for me, I think 2 phases. We've basically cemented the first phase. The next one, of course, is capital formation. And by the way, we're also seeing cost go down. So these are just some of the benefits that we've seen in the digital economy so far. Thank you.
Thank you very much. I'd love to keep this conversation going, but unfortunately, we're out of time. I don't know if we're able to take 1 or 2 questions from the floor.
Hello. Okay. Hi. Good morning. Good morning. Okay. It's majorly with regards to the exchange. We've spoken a whole lot of good stuff around being able to buy and sell on the capital market. But we're moving into like an agentic era. My question would be, are we going to be getting API access for techies that want to be able to connect the average guy to the market? Liquidity is there, and we believe the public can actually easily participate in these things if there are API access that allows tech firms to be able to directly connect us to it, especially for AI agents. We've already been able to fix AI agents to run and buy on NASDAQ and all of that, but they currently cannot buy on the local exchanges. And we really need this because if we don't, the exchanges will be dollarized. And we want AI agents to be able to transact locally. So that's my question there. The next one is for Mr. Ugo. I'm so happy to see you again, Nairametrics, Mogaji. Yeah. We've spoken a whole lot around the innovation side and the ability to democratize these things. How exactly are we looking at OTT? AI agents are going to be voice first. They are not going to be text. Text is rubbish, technically. If they are going to be voice, how do we do OTT and ensure that OTT is able to work locally? Latency is still a major issue. And the average cost to use 11 Lab, they are costing like $3-4 per 1 hour talk. That's not scalable for people locally. That's my question. Thank you.
Thank you very much. Mr. Jude.
I see you have a deliberate attempt to bring the flies to me. All right, so yeah, we do have opportunity for techies like yourself to access the exchange. So if you think about what happened with MTN offer, that offer brought in a new set of investors, over 150,000. I think that was the first digital offer that was done in the market. And obviously on the back of that, the banks have done theirs, concluding all that offer. We now currently have close to 1.8 million active retail investors in the market. And that number is growing and is likely to grow significantly on the back of the pending offer, which, by the way, is going to be really technologically driven. And there are plans already. The NGX Invest, as you know, is a web-based platform and will be utilized for IPOs. And it also has opportunity or privilege to allow the other tech platforms just to be able to connect. So yes, obviously it will require for you to be registered, and then you can have the open access that you need in terms of APIs to be able to connect to your clients. Thank you.
Thank you. Mr. Obi?
All right, so quickly, I hear you on OTT. For a lot of techies, especially young techies, people don't even want human beings again. You want AI to do everything. AI to buy stocks for you, AI to analyze for you. AI. Very soon, somebody was saying your AI clones will be gisting for you now. You'll just be sleeping and it'll be gisting. So it's all good, but I'm just a little coy about OTT for investments. I think AI is still pretty nascent, particularly in the investment space. I don't know. I mean, impersonation is a huge challenge. I don't know whether you've been impersonated before. I have, so I know what it feels like when you see yourself talking, but it's not really your voice, but somebody really trying hard to sound like you, and then you learn people to invest in all sorts of stuff. And these guys are getting better at it. So, and the more you lend your voice to these machines, the more they understand how you speak, your nuances and all of that. And then you could just end up with, in the hands of unscrupulous people. So I can understand that, we want to just voice and then get things done, particularly in the investment space. It's all good, but I kind of feel like incremental steps matter. Let us, first of all, democratize access to investment. Let people even understand what it means to invest. People also need investment education. I mean, AI is great, but you don't really want AI as well to do everything for you. You got to also have your own instincts, your own understanding of markets and how you want markets to work for you. And so getting to where you need to start to use your voice, very soon people will say, if I don't even talk, just look and you will tell me what to buy. No, I just don't think we're there yet. So that's my own take on it. Thank you.
Thank you very much. And before we close this session, I'd like to ask each of the panelists for their final thoughts. If Nigeria gets infrastructure, financing, policy coordination right over the next 5 years, what does success realistically look like for our digital economy? We'll start with Mr. G.
Well, I think for one, it will help to create jobs. We have a lot of youth that are not employed. It's a concern, and it should be a concern, given what is going on now, all these insecurity issues that we hear. I mean, if they were properly engaged in meaningful economic activity, they had the skills to participate in a larger economy, that will really reduce. So it's very important that we, even from a regulatory and a government perspective, to look at the digital economy as a platform that will be very inclusive to engage the young people in a very productive and economic manner. Ultimately, governments will win because taxes will also increase, but it will certainly involve collaborative process, not just locally, but internationally, to also help midwife an economy that we can truly say is now digital in all its ramifications. Finally, Nigeria is not really significantly behind. It's very important to point that out, right? I know we started with the problems, we talked about the issues and the solutions. But if you look at Africa as a continent, I think Nigeria is ahead. Most of the countries in Africa you're talking about, where the major hubs are Johannesburg, Lagos, Cairo, Casablanca, obviously more recently Rwanda. The population of Nigeria is very young, very enterprising. Everyone is almost doing a side hustle. So it will really help ultimately to have a platform that will be able to connect all of this together in a seamless manner. Thank you.
Thank you, Mr. Otono.
Thank you. It's an interesting question you ask. Very interesting, because I tend to think a lot in terms of these kind of things. And if you look at it, the wider platform is, or premise, is the fact that what will take us there will not be dependent on technology alone. You have to look at our environment. Again, talking earlier on, we were talking about the problems of Nigeria public sector, are they private sector, are they industrial sector, or are they people problems? Do we have our priorities right? So what's going to take us to this place where we want to be? It's not just technology alone. A lot of things need to be put in place. The right stakeholders, the right reforms. You have to look at government. You have to look at governments critically. Again, we talked about enabling environment. When you get those rights and you now get to this point where we're looking to get, it's a really, really beautiful place if we can get there, because we're talking about people being gainfully employed. When I graduated, the reality was that it's either you went into a bank or you went into an oil company. Today we're talking power sector, telecommunications, etc., etc. Different world. So when you now look at a digitally empowered world, what it can do in the agricultural space, what it can do in the healthcare space. Even Nollywood will not be what Nollywood is today, right? Which is why I said it's a beautiful place, because there will be a lot of transformation occurring as we progress. AI. I was having a conversation last week in the US, and a friend of mine was like, these children today, they're not even dating anymore. That they have bots online doing the activity for them. Then it was not like, people are actually even marrying characters online. They've gone digital. It's a different world. So when you now start looking at it in terms of what the economy will look like if we can get onto this digital platform, it's a totally different, talking about FX and being able to traverse commercial transactions. People are doing seamless transactions with people in China. Seamless transactions. People don't need to go to China to do transactions in China anymore. Back in the days, you'd have to, which is what I was talking earlier on about, it's another paradigm shift in terms of an industrial revolution that's coming or capable of coming with the digital revolution. But you have to be in the game to play it. Again, you have to be in the game to play. If you're watching a football match in National Stadium, sitting on the bridge outside the stadium, you're not in the game. And unfortunately, we're closer to that bridge than being in the stadium playing the game. So there's a lot of work that needs to be done. There are a lot of bright minds. If we get everything right, the future can be fantastic. I was listening to somebody talking about healthcare in a class I took last year. She came in and she was talking about a lot of the developments that she has initiated herself in the healthcare space. And she started with convincing a procedural room at a hospital. Put 30 cameras at different angles there, so they're capturing every scenario that's going on. Because where they're seeing medicine going is as you walk into the hospital, your problems have already been diagnosed, and they're already thinking of a solution for you as you are walking into the hospital. And again, you look at the number of industry sectors that are out there today, and the number of changes that can occur. We're still amazed in Nigeria about the fact that people can grow flowers in Kenya and have them in European markets the next day. Phenomenal change coming. We have to be in the game to play. Thank you.
Thank you very much. So we'll go very quickly to Mr. Robert.
Thank you. So I think I am the eternal optimist because I go back to when I was younger, and it's not that long ago, I promise. I go back to when I was younger, and there was a common statement that me and my friends and peers used to say, that if you sort out the power problem we have in this country, it will be a completely different economy. And let's just pick that problem out, that singular issue out. And I bring that to this as well, that if in 5 years we are able to pull the impossible off, and we are able to resolve that singular issue, there's a compounding and accelerating effect that then has on the rest of the economy, and the digital economy in particular, because we have such a young and hungry population. So I think success looks like sorting power out. California, that's what it looks like to me. Thank you.
Mr. Oliver.
Thank you. 5 years from now will be 2031. I'd like to be very specific. What does success look like in 2031? We've sorted out power, sorted out connectivity, we've closed the digital gaps. Everybody has access. We can unleash everybody's creativity. Look at what we've done. Afrobeats everywhere, fintech, and we just started. Imagine 200 million Nigerians doing what they know how to do best in their various spaces. The possibilities is limitless. That's what I say. Thank you.
Thank you. Mr. Ogede.
All right. So, a lot has been said, so I'll just summarize quickly with success for me being information. Access to information is power. So the more information Nigerians have, credible information that is, the better we are as a nation. And that better we are as a nation is being able to use information to get the right people in government, right? So there's a lot of things that we can't solve, but if we can solve good governance, I think everything that we've said here will be sorted out. And so if this digital economy does not lead to that, I would, I'll be right to say we haven't succeeded. That's it for me. Thank you.
Thank you very much. And on that note, we bring a close to this session. What remains clear Thank you very much to the panelists. What remains clear is that the future of digital economy will depend not only on innovation itself, but on our collective willingness to build the systems capable of sustaining information at scale. Thank you so much once again to the panelists, to the audience, and I wish everybody a good day and happy conversations.
Thank you. Thank you so much, Fatima Muhammad, for steering the conversation. We'll take a quick group picture. I'd like to invite our managing partner, Ovia Alex-Adedipe. I'd also like to invite Simisola Eisomi, partner at DOA, and Adeni Duale to please join this picture. Thank you. Simisola Eisomi would also be helping with gift presentation to our panelists for being here, for a job well done, and for the insights shared today. Thank you. we'll just have all partners join them. It's a large family photo. So, of course, we have Soibi Ovia on stage, Sheye Anila. Sheye Anila, I'd like to invite you on stage as well, and Omoumi Sunny. Thank you very much. All right, press and media, do you have the pictures? Thank you. Simisola Eisami would help with the presentation of the gifts to the panelists. But panelists, please remain on stage. Thank you very much. Press and media, please capture this moment. Thank you so much, Fatima, and thank you to our panelists as well. We celebrate Mr. Jude Chemeka, Mr. Dapo Otola, Mr. Obichuku Ugodre, Robert Ijewere, and Oluwaseun Oluboyo. Thank you so much for being a part of the conversations today. All right, thank you so much. We're warming up for our next panel conversation. Our moderator is here. All our panelists are here as well. But before then, we will invite very quickly for a short